Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Alright, so welcome back guys. This is going to be my Elliott Wave count for the week ahead. I'm going to be looking at GBP, USD, gold, and the S&P 500. But first of all, any views or opinions that are expressed in this video do not constitute to financial or trading advice. The previous video, the first video that I actually sort of uploaded on my channel, I actually had a completely different count to the count that I have here on the screen. I've decided to do I've decided to show you guys a different count that I have in mind, and I do have different counts for all my pairs that I trade personally. As an Elliott Wave theorist, it's very important to have different counts, different scenarios in play depending on the rules and the strategies and that you create and you follow with Elliott Wave and stuff like that. It's very important to do so. But anyway, let's get started. So obviously from the previous video I did say that currently that wave 3 finished here and we are currently in this wave 4 before we get one final push up. However, this is another count that I did, and I'm sort of explain it to you guys one step by step. So let's get started here from the bottom. So obviously we've done a 1-2 here, which is pretty normal, as the same as before. And then we have a 1, a 2 as a running flat, and then we have a wave 3 extended, a wave 4 into a triangle, and a wave 5. This gives us a 1, 2, 3, 4, 5, and that gives us our wave 3 in the higher degree. And then we have a B, and a C. That gives us our fourth wave, and we then have a fifth wave ending diagonal to give us our final fifth wave in a higher degree. And where we are currently is we actually already started the sort of bearish movement to bring this market down. So let's go into a little bit of a smaller time frame and let's show you the count. So what we essentially have is a wave 1 here, and then we have a 3-wave corrective structure here as an A, B, and a C. That gives us our wave 2, and then we have a 1, which is a leading diagonal, a 2, a 3, 4, and a 5, and that gives us our third wave. If you use our trend-based fibs from here, from wave 1 to wave 2, you can see that from the 1.618% level we start to see some sort of rejection that's going against the current trend. And where we are currently in this market is, I'm assuming that we are currently in that wave 4 degree. Now wave 4 could either be finished right here, and we are currently seeing the fifth leg in right here, or we could actually be continuing on this fourth wave, to give us whatever it wants, maybe go up higher again, giving us a B, and a C, or maybe into a triangle or whatever it is. But we are currently in this fourth wave. However, when I look at this wave on a smaller degree, this is quite very impulsive. So I am gonna assume that this is the wave 4 completion, and this is going to be the fifth wave completion right here. And we eventually, once this fifth wave completes, then we're going to get actually a deeper correction to the upside. That's basically going to be about 50 to 61% retracement of this entire wave, before we then see some bearish movement coming back in this market. So I would say, if the wave 4 isn't complete and we start to see some sort of push up here without it breaking this level right here, and then that will give us an A, B, and a C. And then that means we are currently still in this fourth wave before we expect a fifth wave to come back down, and then from there we'll start seeing that corrective structure again before we continue going back down again. All right, so that's GJ. GBP USD. Now GBP USD, obviously, I did the count again, and this is another scenario that I have in play, which is a wave 1, a wave 2, and then a wave 3 here, a wave 4, and then a wave 5, which has completely finished. So this move has completely finished, and where we are is we're actually going to be heading sort of towards the upside, um, as a corrective move to the upside. Um, this I have sort of counted as an A, B, and a C. And I said in my previous video that this is the basically the wave 4, and then where we are expecting is this wave 5 back down as an impulsive. However, this might not be the case, and the wave 5 could already be in, and we are currently expecting this to be an A, B, and a C, and then we're expecting another A, B, C here, about 50 to 61% retracement of this entire wave, before we then see the market going to the upside. Another scenario as well is that this may not be an ABC, but it could also be considered as a 1, a 2, a 3, and this could be a wave 4, and then another wave 5 to the upside. If this market does sort of come up here, breaking this structure, and we're starting to see that this was an impulsive move, as a maybe it might end off as an ending diagonal for a wave 5, because usually wave 5s do end in ending diagonals. Then obviously this will be a 1, 2, 3, 4, 5 impulsive move, with then the possibility of a deeper correction coming in, about 50 to 61% of this entire wave, to then bring us more to the upside in the near future. So that's GBP USD. So gold has been a bit tricky. I am expecting a deeper correction to come in to give us our wave 2, before we then sort of continue going to the upside. However, this may not also be the case. At the same time, this is extremely bullish. All the corrections here have been extremely small, and then the buyers have just come in. It's been extremely small, then the buyers have just taken over. So with that being said, we could also possibly be this could be a 1, 2, and then a 1, 2, 3, 4, and a 5, and then a wave 3, and then 4, 5, and wave 2 could already actually be in. Maybe this could be the wave 2 here as a 1, 2, and then we have a 1, 2, 3, 4, and then a 5 as a leading diagonal, then a wave 2 here, and then this is the wave 3 of 3. So we could actually be in that third wave to the upside, and we could actually continue, just literally see the market just keep pushing to the upside. And I think I'm going to stick with my original count here, as this has been extremely impulsive and bullish to the upside, and usually we do expect a sort of deeper correction coming back in to give us our wave 2. Keep in mind, although this is extremely bullish, and I have said that this is a wave 1, this could also be considered as either a wave 1 or a wave A, wave 2 or a wave B, or a wave C or a wave 3, if that makes sense. So keep in mind, this is extremely bullish, and I wouldn't look to buy the market anytime soon. I'll definitely be looking for that deeper correction to sort of come in before we actually get involved. So that's gold. And for the S&P 500, obviously from the S&P 500 on this chart, the chart did look like this in my previous video. However, this is just one of my counts. I did say that it's going to be a WX, and then we are expecting an A, B, and a C coming down to give us our wave Y. However, another count that I had in mind was also this one here, which is essentially a 1, 2, 3, 4, 5 as a leading diagonal, a WXY as a wave B. So this is our A, this is our B, and then this is our C wave in 5 waves. This gives us an A, B, C, or a zigzag corrective structure. And where we are currently is this move right here could actually be extremely impulsive, as it is giving us a sort of leading diagonal here. So our wave 1, 2, 3, 4, 5. And then what we are currently expecting is basically an A, B, and a C, to then sort of push up to that upside. And then if that's the case, then that's fine. That basically means that the wave 4 of the wave 5 has ended, and we are currently going to be seeing the market eventually just push up to the upside, giving us that fifth and final leg. I hope you guys enjoyed my video. I hope you guys enjoyed my analysis. Please do like, comment, share, and subscribe. And I do have a Patreon for those who are interested in the link below. And yeah, take care.